Good morning. Today is Monday, January 8, 2024. You're looking at 6 levels that have been calculated, identified, put on the chart before the market opens. It's currently about 9:11 a.m., 19 minutes or so before the market opens. In the pre-market, the spiders of the SPY are at 468.20. Later today, after the market closes, we'll circle back around and take a look at how trades that were entered based on these levels played out. The market is closed for the day, and it turned out to be a trend day up. The spiders climbed higher most of the day, and they closed at the high of day. And on the larger time frames, you can see that there were very few pullbacks. The spiders did hit 3 of our levels, and 1 produced a trade per the rules of the strategy. By 9:45 a.m., the spiders had already come back down and were given the appearance that they were going to test this 468.35 level again. And that's where a long trade would have been entered in the E-minis. But they came up short. They pulled away quickly. And then when they tried again, they couldn't get any closer, and they pulled away with even more gusto. So that's bullish behavior since they did not satisfy this 468.35 level. So this one never activated a trade, never touched it. Spiders climbed higher and into this 470.15 zone. And after kind of a pullback consolidation sort of thing in front of this level, they didn't get as close to the level as I'd like them to get for me to be more confident that this level should be removed from consideration. I have parameters that I use for this. And for this level, though, I started looking a little higher to see what was going on up higher that might add more validation that this area might provide decent resistance for me to go short here at this level. I noticed that 470.68 to the penny was the 38.2% fib retracement from the recent high about 2 weeks ago. And there were other reasons that that level is important. So I made the decision to go ahead and short here and go short at 470.15 with a 5-cent buffer. Actually, I think I did leave it at 470.15. It's just too strong. I didn't think it was a good need to apply the 5-cent buffer. I know that's kind of against the rules, but it was it just felt bullish today. But I wanted to sell again if they got up to this 470.68. I actually put the trigger in to trigger the E-mini short at 470.70 to be exact. So I shorted at both levels, the calculated level and this new level I added on the chart that I identified in real time. So my average entry price did net me a base hit, just barely. They pulled back 40 cents, 4 points in the ES, and the spiders resumed their climb up. So while it did give me the 4 ES points, it's because I played it safe and spread out my risk across these 2 levels. And since this other level that I added after the market opened wasn't a formula-derived level, I'm giving this 470.15 the same treatment with regard to the tracking log. I want to keep the data clean because I rely on this data too. I hope it helps you guys, of course, but the rules are the rules. So if you're trading these levels the same as I am, I want you to be sure that you can rely on the law of averages the same as I do. So this really was a fumble when I calculated out after the fact with a base on the reversal, but we'll get to that in a minute. Spiders got into the neighborhood of 471.91. They were still going strong. It looked like the bulls were definitely in charge for the day. If the spiders are going to find a high, it's usually in the morning, but here it is approaching 1 p.m. or so, and they were still going strong. So after watching them consolidate under this 471.90 level for 20 minutes or more, it didn't take me that long to stop trusting that level for a short trade. This was a classic no trade scenario right from the rule book. If you've seen these scenarios, I know you've seen these scenarios before where the spiders hang out under a level for enough time for them to build up enough steam to bust through. It doesn't always happen like this, and sometimes the level works as designed and a good short trade would have worked. But sticking to the rules and treating this as a process, you would have not keyed in an order at this level. I did not, and as you can see, that was the right decision. The spiders just churned through this level and kept moving higher. It actually isn't too surprising that when they finally did hit the level, which would have been 471.86 with this 5-cent buffer applied on this one, if you wanted to play by the rules exactly, it's not too surprising that when they finally hit it, they pulled back 20 cents or so almost immediately. So this level is important still, but it's also not too surprising that the spiders were still going very strong at this point, and the pullback was pretty much insignificant. But there were no more levels on the chart for me today, so this was it. And we'll look at the tracking log now and survey the damage. So the first level at 468.35 never triggered the trade, and in retrospect, that was too bad because it's obvious now, after the market is closed, that it would have been a great day to ride a long position up, since we know now that it was a trend day up, but you never really know what the market's going to have in store for you. So I'm fine to stick with the base hit approach, and many times shorting on a trend day gives you the most base hits. It doesn't happen too often, but I have pulled 5 base hits out of the market in one day, just treating this as a process. Have I mentioned how important the law of averages is? Yes, I'm sure I have. So that's it for today, though. I hope you found this information interesting or helpful, or even confusing. If you not, I don't hope you find it confusing, but if you did or do find this confusing or other opinions of this, feel free to leave a comment. I'd like to know what your thoughts are. And in the meantime, if you subscribe, you'll get notified when I post new daily recap videos of my trades. Thanks and have a great day.